Hello, my name is Brad Halverson, Caterpillar's Group President and CFO. This morning we reported financial results for the second quarter. Sales and revenues in the quarter were $14.6 billion, down 16% from the second quarter of 2012. Profit was $1.45 per share, down $1.09 from last year, due largely to the decline in sales. While it was a tough quarter, operationally we performed better than the headline numbers would suggest. Costs were lower. Safety, quality, and pins improved. Dealers utilized our product distribution center inventory at a higher rate. We improved on-time delivery performance for our customers, and we had a great quarter for cash flow. Despite the operational improvement, we had three sizable headwinds in the second quarter. First, our sales and profit were hurt by a substantial reduction in dealer inventory. Dealers took out $1 billion of new machine inventory in the second quarter. That means our sales in the quarter were about $1 billion below end-user demand. Dealer inventory reductions are expected to continue at a high level throughout the second half of the year. In addition to dealer inventory reductions, we reduced our own Caterpillar inventory about $1.2 billion in the quarter. While that's a good thing, and it was one of the reasons that our cash flow was strong in the quarter, it was negative for profit. To reduce inventory, we produce less. When we do that, we have negative cost absorption, and it's negative for factory efficiency in the short term. The third headwind in the quarter was currency hedging and translation. We had losses of $134 million in the second quarter. That was a result of changes in currency exchange rates from the start to the end of the quarter. As we look back and compare the quarter to the second quarter of last year, we need to put it in perspective. During the first half of last year, it looked like economic growth was turning up, and our business was doing very well, particularly our resource industry segment, where their main industry, mining, was doing great. In fact, the second quarter of 2012 was our best profit quarter in history. Sales were great, margin was great, and profit was a record. Fast forward to where we are today. The mining industry is cutting back on capital expenditures, which means they're buying less of the mining equipment we sell. In addition, dealers are cutting inventory. The combination of lower end-user demand and the big dealer inventory reduction has led to a substantial sales reduction in our resource industry segment. That's by far the main reason our sales and profit are so much lower this quarter than in the second quarter of 2012. While mining has been a tough business over the past year, it is important not to lose sight of two important things. First, the mining business is cyclical and has a history of substantial ups and downs. While we find ourselves in a mining downturn at the moment, it is, over the long term, a great business, and the long-term prospects for mining remain positive. We expect the world economy to grow, developing countries to grow faster than the world overall, and we think declining ore grades are leading to more dirt and ore moved per ton of output. Those are the big reasons why our long-term expectation for mining is positive. The second thing to not lose sight of is the balance in our company. In addition to resource industries, we have three other major segments in our portfolio of businesses: construction industries, power systems, and financial products. Those businesses haven't seen the severity of the problems we've had in mining over the past year. Our construction business is down from second quarter last year, but much less than mining, and they're showing signs of improvement. Power systems had another solid quarter. Sales were down a little from last year, but they lowered cost, their margin rate increased, and their profit was about the same as last year's great second quarter. Financial products had a great second quarter as well, and their revenues and profit are up. In addition, one area of the business that has been very topical over the last 2 years is our construction equipment business in China. After a great year in 2011, the industry declined substantially in 2012 and has dropped some in 2013. Despite that, our sales in China, excluding acquisitions, are up about 20% versus the second quarter of 2012. We've been gaining excavator pins in China, and that's great news. While we'd like the industry there to be better, we're pleased with the sales increase in the quarter and our performance versus our competitors. In this morning's financial release, we also revised the outlook for 2013 down. We're now expecting 2013 sales and revenues in a range of $56 to $58 billion, with profit per share of about $6.50 at the middle of the outlook range. That's down from the prior outlook of $57 to $61 billion for sales and revenues, and profit of about $7 per share. Overall end user demand is similar to our previous outlook, but we're expecting dealer inventory reductions for the full year of 2013 to be more significant. And that's the main reason for the lower outlook. On the bright side, the sharp reduction in dealer inventories in 2013 means we are underselling end user demand this year, and that could help set us up for better sales in 2014. In closing, many thanks to our customers, to our dealers and suppliers for great partnership, and to our employees who are responding in this challenging environment. While we had a good quarter operationally, the results were down substantially from last year. Because of that, we've already taken a number of actions to adjust production and reduce cost. With the drop in the outlook we announced today, we are preparing to do more. We are making tough decisions in response to the current environment to position the company to be competitive and well-positioned for success in the long run. It's important that we act with a sense of urgency, that we are decisive, and we are smart. You can find more information about our second quarter 2013 results in our financial release, which is posted in the Investors section of our Caterpillar.com website.